Hey, what's up, everybody? So, today in this video, I'm going to be discussing five stocks that I'm invested in for 2022. These really are my highest conviction stocks. And if you've been investing in 2021, especially the latter half of 2021, and especially in this last month or two, you would know how rocky the stock market is and how shaky things have been. There's a lot of blood going on. And so right now is sort of a scary time to invest. So I'm going to be showing you though the five stocks that I'm bullish on for 2022 despite all the things that are going on. So if you're wondering what to invest in 2022, keep an eye out on these five stocks, and do your own research. This is not any kind of financial advice, but take a look yourself and let me know in the comments below what you think of these five companies. Hey everyone, so I promise that all these stocks are not going to be tech, but I am going to start out with my two highest conviction stocks, and they are weighted heaviest on my portfolio. And so without further ado, the first stock ticker is just GOOG, so Google, stock ticker GOOG. Okay, so right now Google is trading at $2,848. And so if you look at Google right now, the PE ratio is relatively low at 27.43. Compared to some of its tech peers, that's really great for a company of that size. And we've all heard of Google. Right now they have a market cap of $1.89 trillion. And so I really don't think Google is gonna go down, or it's really gonna go anywhere, just because of how much they're producing in the pipeline. There's just so much going on at Google. I don't think I really need to talk about it. But take a quick look at Finviz.com. Finviz lets us know some important technical indicators. Right now, the P ratio is it's a little higher on Finviz. I don't know why, but the 4P ratio is still at 26.88. If you take a look at the earnings per share this year, it's about 72%. And so, Google's growing at a really healthy rate. I don't really have much concerns for where Google is going to be in 1, 2, or 3 years. And I also like to take a look at Yahoo Finance. These are just some of the tools I love to use, just to help me identify stocks that and where they are. So taking a quick look at the financials, Google's revenue has just dramatically increased, even this past year. As you can see, their total revenue is here. Their EBITDA they're just making a ton of cash, right? So Google is definitely profiting and making really good money. And so that's why I think Google is definitely a buy today. One last thing I like to take a look at is the Bollinger charts. Just this is just basically the moving average of Google, and tells you, basically when it's a good time to possibly buy in. And right now it is trading at around the average moving price, so it is a great time to buy. Okay, so the second stock kicker is, now this is one more big tech stock, but this is just another stock that I'm bullish on, and it's just Facebook. Okay, so, or other words, or another, or change names to Metaverse. Okay, so Meta platforms. So the P ratio right now for Meta or Facebook is sitting at 23.27. So that's super low for a company of this size. And also their market cap is at $905 billion. So they're almost $1 trillion company. It's just short behind Google. Taking a quick look at the year-to-date chart, Facebook has actually been moving pretty sideways the last couple months. It's even been down a little bit from its all-time high in September. And so right now is a great time to invest in Facebook, because I really do think that Mark Zuckerberg, despite some of the allegations and some of the things that are going on with censorship and all that, I do think the metaverse is a really good investment that is going to change and disrupt the world. And so that's why I think Facebook, given how much cash they have and how much assets and employees that they have going on, I think Facebook is definitely a stock that you want to have in your portfolio. Taking a look real quick at the Yahoo Finance for Facebook. As you can see, the financials is obviously very, very healthy. They're making a lot of revenue. They're over here, their profit is insane. They're making a lot of profit this year as well. So there's no question that Facebook is going to be around in 1, 2, or 3 years, and I do think it's going to continue to go up. Especially when the economy sort of bounces back up. Taking a look at the Bollinger Bands right now, it is trading below the moving average, so it is a great time to buy. Right now at $325, I think that is a steal, and so this is definitely a stock that I currently have in my portfolio, and I'm going to continue to add to my portfolio. Okay, so just taking a quick look at Finviz, just to just get a quick overview of some of the indicators that may be helpful for us. Earnings per share this year is 57%. So again, pretty healthy rate. RSI is one that I forgot to talk about with Google. Just tells you the relative strength index. So right now it is slightly oversold. Okay, so it means that more people are selling than buying. So that's why, usually if it's oversold where more people are selling than buying, it may be a good time to buy because everybody's buying it up. Okay, so yeah, and then so those are the only two big tech stocks. There is one more stock that is relatively big, but it's not one of the FANG stocks, and that is HPQ. Okay, so HPQ stock, as many of you have heard, is Hewlett Packard. Hewlett Packard is not only a printer company; they do so much more than just printing, and right now it would definitely be considered a value stock because it's sitting at a low P/E ratio of 6.78. They have a market cap of $41 billion, so that's still really, really huge. That's maybe about like a little less than half the size of Facebook. But Facebook being so large, HP is a pretty considerable company in relation to some of the big tech stocks. Right now, the dividend yield is at 2.77%, so they do pay a dividend. And so I think this is a relatively safe stock to invest in because there's so much in the pipeline as well. Let's go over and take a quick look at the Yahoo Finance, and let's see their financials. So right now, as you can see, their revenue has continued to grow. They haven't really gone down. And not only that, their net profit this year is very, very good as well. Okay, so 6.4, and taking a look at the Bollinger Bands, we can see that it is slightly over the moving average because there was a big jump in the last couple months. But I do think this stock is still definitely one that is a buy today, just because I think long-term HPQ is going to be a great stock to own. Okay, so as you can see, right now the RSI, Relative Strength Index, is slightly overbought, but it's not too bad. It's only at 58.59. P ratio is just really low, 6.62, 4P of 8.24. The earnings per share this year is 166%. It's really grown and continue to grow a lot for HP. Okay, so these are really the three tech stocks that I have highest conviction for: Google, Facebook, and HPQ. Now we're going to talk a little more about more value stocks. Okay, so these are stocks that I'm bull on long term that aren't selling for very expensive right now. And the first stock ticker is just X. Okay, so steel. Okay, so this kind of, right now steel is getting hammered. There's two stocks actually that I am bullish on with steel and iron ore, and that is X stock and CLF. Okay, but I'm gonna talk about X stock first. So steel has been down really quite a bit. It's still up over a year, but it's been moving pretty volatilely over the last couple of months. But I do think steel is going to have a turnaround eventually into 2022. I don't know, but for sure, if you're long steel, you're definitely going to make a lot of money. Right now, the P ratio of United States Steel Corporation is sitting at 2.00. That is insanely low. They do have a market cap of about $6 billion. Steel, United States Steel is a great company to own. They've been around for so long. since 1901. They have 23,000 employees. Just taking a quick look at their financials. Okay, so taking a look at the financials, we can see that yeah, so it's the revenue has really grown a lot this past year. Their margins for their profit is still really healthy. They're making really good money. And taking a look at the Bollinger Bands, we'll probably see that is selling under the moving average. So right now is a really great time to buy steel. If you believe that steel is going to have an eventual turnaround, which I really do. Taking a look at Finviz, Finviz is showing us that the RSI is at 40.87, so it is oversold. And yeah, just the fundamentals for steel is great. The other stock ticker that I was telling you about was CLF. Okay, so Cleveland Cliffs is sitting at a really low P ratio of 4.95. Again, steel has just been hammered the last couple of months. And you're probably going to see more volatility in steel, honestly. But look at the year-to-date chart. It's up 33%. And I do think it's going to have so much more room to move up. And speaking of steel, if you're long steel, I would definitely use options, just because you can get in at a cheaper price, or using less cash with Google, Facebook, and HBQ. Sorry, with Google and Facebook, I really just bought shares, but with with HBQ, I did buy a leap option for steel. I bought leap options for CLF. I bought leap options, but you can do different things. You can sell puts for income, or you can buy a leap option, which just basically is a call option that you buy. That's a year or more out. If you take a look at Steel Corporation, right now you can get a call option at pretty good prices, right? So you can buy a call option at $15 for $865, and the stock will only have to move up about 7% for you to make a profit. Yeah, so and if you take a look at CLF, you'll probably see very similar options. We'll take a quick look. CLF. Okay, so buy call, and we're gonna go into 2023, and yeah, right now you can buy options at around, if you bought a $12 call option expiring January 2023, you can buy for $855, and the stock would only have to move up about 6%. Okay, so steel and CLF are the two value stocks that I'm very bullish on, and I do think is going to have an eventual turnaround. Yeah, so these are companies that I definitely want to own going into 2022, and I want to continue to add as I see any kind of volatility. If the stock market moves down, I'm definitely going to add more to my position. And if it goes up, it'll be great. I think you'll make a lot of great money invest into these stocks. But again, this is not any kind of financial advice. This is simply stocks that I've taken a look at. Take a look at yourself. Look through the fundamentals, do your research. And if you like this kind of content, if you want me to make more videos like this, make sure you smash that like button, subscribe, comment below if you have any questions. I'm always more than happy to help. Until next time, guys, I will see you in the next video.